Imagine a company that can legally print money and actually earn interest on every dollar it creates. Today we're talking about Circle. Circle is the company behind the stablecoin USDC. Here's how it works. A customer deposits $1 and Circle issues $1 on the blockchain. Each USDC is always worth $1 and the holder can use that USDC anywhere in the crypto ecosystem. Until the user redeems their USDC for actual dollars, that dollar sits in Circle's reserve account and Circle can invest it. Sounds familiar, right? This is very similar to how insurance companies operate. When an insurer sells a policy, they receive float, the premium money they can invest before claims are paid out. Warren Buffett's Berkshire Hathaway became a legend using exactly this model. The essence of this business, access to ultra-low-cost capital. And Circle does the same. By issuing USDC, it gains access to zero-cost capital. If you understand insurance, you immediately get the beauty of that. Before we go deeper, we need to understand the stablecoin market because Circle has a strong rival, Tether, the issuer of USDT. Right now, the market is dominated by two giants, USDT, roughly 70% market share, Circle, around 30% market share. Everything else is small by comparison, and Tether is a beast. Just look at two Bloomberg headlines. Tether earns $15 billion in annual profit. Tether valued at $500 billion in recent funding round. By the way, Circle's valuation is only about $27.2 billion. Tether grew fast from the wild west of crypto. Circle is US-based and more compliant. Next, let's break Circle down like an insurance business into two sides. The asset side, meaning investments, and the funding side, meaning the inflow of USDC deposits. On the asset side, Circle's income comes primarily from investment returns. Most of this money is invested in US Treasury bills, just like Berkshire Hathaway's short-term holdings. In Q2, it reported $634 million in investment income, that's about $2.5 billion annualized. Circle's reserves were around $60 billion, generating roughly 4.1% yield. 60x 4.1% equals $2.46 billion, which matches perfectly. Let's take a look at Tether. As we can see, most of its funds were invested in US Treasury bills and repo agreements. Tether's profit in 2024 was around $13 billion. Its holdings of Bitcoin and gold have generated very strong investment returns. Aside from that, Tether operates almost the same way as Circle. By the end of 2024, its reserves stood at around $114 billion, with a yield of about 5% that would generate roughly $7 billion in income. According to Bloomberg, Tether's profit margin is estimated at 99%. Stablecoin businesses have zero funding cost, and the marginal cost of operation is negligible. So you can basically describe the model as profit equals circulating stablecoins x market interest rate minus fixed cost. So, grow circulation, and profit automatically grows with it. On the funding side, everything in its strategy revolves around USDC adoption, expanding use cases. In its financial report under other notable items and recent developments, regulatory compliance, building trust, and paving the way for partnerships. Building a payment network around USDC, opening up a massive new use case in payments. Expanding adoption. The logic couldn't be clearer. According to Q2 2025 report, USDC in circulation grew 90% year-over-year to $61.3 billion, and another 6.4% to $65.2 billion as of August 10, 2025. On-chain data shows it has already reached $75.8 billion. By the way, this is the magical part about blockchain. All the data is public. That's over 15% growth in under 3 months, or roughly 75% annualized. Impressive. Next, let's take a look at the overall market. First, the overall stablecoin market is growing rapidly, including Tether. USDT is increasingly used in cross-border trade settlements thanks to its speed and low cost compared to traditional wire transfers. Second, stablecoins have strong network effects and wide moat. PayPal has launched its own stablecoin, PYUSD, but so far it's barely made a dent. Third, USDC's growth rate is outpacing USDT's. Its advantage lies in regulatory compliance, which will matter more as crypto integrates with traditional finance. So this is today's video. What do you think about Circle? If you found this interesting, make sure to like and subscribe. I'm Faye. I've been investing for over 10 years, with returns exceeding 20x. I share practical, easy-to-understand investment insights based on real experience. Of course, I'm not a financial advisor. Everything I share is for educational purposes only, not financial advice. Please do your own research and know your risk.